Ethereum is going to $10,000, and there's nothing anyone can do to stop it. This is going to happen. The only question is, when is it going to happen? In this video, I'm going to share with you some major price catalysts that are influencing Ethereum and are making it more and more likely that we're going to see that $10,000 price point reached at some point in the not so distant future. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic that you would like to learn some more about, then make sure that you subscribe to the channel, gently tap on the thumbs up button for the YouTube algorithm, and of course, click on the notification bell to know when I put out a new video. Okay, let's just go ahead and jump straight into this here. The first reason is the transition to proof of stake. Now, this is going to reduce the environmental impact of Ethereum, which is currently using as much energy as a small country. It'll get it down to the point of using as much energy as a very small town, like a town of 2,000 people, for example. It's also going to change the economics of Ethereum from the current mine and dump environment to a stake and hodl environment. Now look, the environmental impact of the transition to proof of stake, that's really cool. Obviously, it's very, very important in terms of narrative. We've seen Bitcoin being hit with the stick of, in climate change and environmental impact so many times. They will no longer be able to hit Ethereum with that stick. In fact, when the NFT craze was going on earlier this year, you heard that a lot, that, well, we're not going to do NFTs because of the environmental impact. Every NFT that's minted uses up X amount of energy and it's bad for the environment. So now we're going to move away from that part of the conversation. That narrative will no longer be relevant. But I get much more excited about the economic impact of moving to proof of stake, because right now what you have, a bunch of miners who, hats off to the miners. Thank you for securing the network. I appreciate the work that you do. But the reality is that miners mine Ethereum and then they go and sell that Ethereum for cash in the market, creating constant sell pressure for Ethereum. It's basically mine and dump, mine and dump, mine and dump. So what we are going to see when we transition to proof of stake is now people buy the Ethereum, they stake the Ethereum, and they're much more likely to hodl the rewards that they get. Why is that the case? Well, because the more Ethereum you have, the more Ethereum you can get. It actually incentivizes hodling your Ethereum long term. Because if you, let's say you mine or, receive as staking rewards, I should say more appropriately, 10 Ethereum a year, as an example. Well, you could take that 10 Ethereum that you've earned during the year, restake it, and get another 0.7 Ethereum the following year from that Ethereum that you just earned this year. So you earn more and more and more over time. So there's a strong incentive to continue staking. And I think we're going to see a massive amount of Ethereum locked up chasing those staking rewards. Fundamental shift here. I'm very excited about that impact of the transition to proof of stake. Then we have EIP 1559, which is going to be introduced in about a month's time approximately, unless, of course, they decide to delay that. That does happen in Ethereum, but approximately a month from now, we should see EIP 1559 coming online. Now, what this is going to do, this is going to introduce a fee-burning mechanism, so some transactions will start to be burning the fees. So that fee that would otherwise be paid to miners will no longer be paid to them. Instead, it will be sent to an address which burns that tiny bit of Ethereum every time. Now, for one transaction, it may not make such a big deal to the overall economic picture of Ethereum, but when we start to realize 1 million transactions a day, every one of those or most of those seeing a little bit of a burn happening each time, we actually start to then talk about Ethereum becoming a deflationary asset. So over time, we will start to see the supply of Ethereum trending downwards. So right now it's on an inflationary curve going up continually, but once we start seeing that fee burning coming in, we start moving downwards. Now long term, the economic impact of a reduced supply of Ethereum is a damn big deal, because it makes Ethereum more scarce. The term that's been being thrown around recently is ultrasound money, right? So if a 21 million supply cap for Bitcoin makes it sound money, a deflationary Ethereum, where the supply is continually reducing over time, makes it ultra sound money. So this is going to be a big economic impact for Ethereum. By the way, if you want to earn a safe and simple passive income on your cryptocurrencies, then check out BlockFi. You can earn 4.5% on your Ethereum, 5% on your Bitcoin, up to 9.3% on your dollar stablecoins. If you get their hot new credit card, you'll also earn Bitcoin back rewards as well as higher lending rates for your stablecoins. Now, BlockFi is a great option for beginners. I just want to make this very clear. You can actually get better rates than BlockFi if you go out into decentralized finance, but it comes with its own risks, its own rewards, its own requirements in terms of being able to pay gas fees, etc., etc. So if you're just starting off, BlockFi, it's the simplest way to earn some passive income on your crypto. And if you use the link down below in the description to start your account, you can actually get up to a $250 Bitcoin bonus. So definitely go ahead and check that out using the first link in the description. Now let's get on to the third reason to be bullish on Ethereum. Ethereum 2.0 is coming, which is very, very exciting. Now there's two massive things that we have to get very, very excited about for Ethereum 2.0. Yes, there's proof of stake. Obviously, that's very exciting. But we're going to see massive scalability coming into Ethereum via network sharding. This essentially takes the Ethereum network, splits it into 64 parts, allows the network to work much more efficiently by sharing the load of computation between all of these different shards of the crystal, if you will. We're also going to see applications becoming much more robust and internet friendly, basically, by the implementation of WebAssembly into Ethereum 2.0. These are both very critical, very important upgrades, along with proof of stake, obviously, which is part of the picture, but is being moved up ahead of network sharding. So we're going to see proof of stake coming potentially by the end of the year. Obviously, we already have the staking contract live for ETH 2.0, but it's kind of a one-way street, and we're talking about the total merger, the end of proof of work when we talk about proof of stake coming by the end of the year for Ethereum. But the 2.0 upgrade, it's massive, and I think just even in terms of media hype cycle, Ethereum 2.0 is going to continue to be a big deal because we're going to continue to see these test nets coming out, moving, of course, then on to mainnet, et cetera, et cetera. So this is going to be a big deal in terms of continuing to drive the narrative forward that Ethereum is an innovational cryptocurrency. It's continuing to adapt to the new realities of technology. It's continuing to move forward. So don't count out the Ethereum 2.0 hype that will continue to build over the next year or year and a half as we continue to see the technology rolled out for Ethereum. Of course, the fourth one has to be that Ethereum is the home of decentralized finance. And yes, I know we do have competitor chains which are starting to get market share. BINANCE Smart Chain, for example, has captured like 7-8% of the total DeFi market up to this point. But the best applications remain on Ethereum. The applications with the deepest liquidity remain on Ethereum. So what this does, all of this decentralized finance stuff, as well as all of the stablecoin transfers that are happening every single day, as well as all the NFT purchases and everything else happening on Ethereum, what that does is it creates constant demand for Ether. So for the asset, people need Ethereum every single day if they want to interact with the Ethereum blockchain. So if you want to use Aave, you need Ethereum. If you want to buy an NFT on the OpenSea NFT marketplace, you need Ethereum. If you want to send a stablecoin transfer, maybe you're sending remittances or just paying a friend, you need to send $500 worth of stablecoins to somebody, you need Ethereum to do that. The fact that we have so many users every single day using the Ethereum network really speaks for the success of Ethereum. And every single time one of those transactions is made, people need Ethereum. And all these network upgrades, the proof of stake, the network sharding, WebAssembly, all that stuff is going to make Ethereum more user-friendly, and meaning that there'll be more users that we can welcome in terms of getting the fees down and all that stuff, which will mean increased demand for the Ether asset that will continue to trend up over time. So this constant demand is very good for the long-term price health of Ethereum. The fifth factor is the triple halving. Now this is coming as part of the ETH 2.0 upgrade. Now this is going to reduce Ethereum inflation from its current 4.5% a year to down to around 0.5% 0.5% a year. That's a big, big deal. People get really, really excited about Bitcoin halvings, and rightfully so. The Bitcoin halving is a big event. That only cuts emission by 50%. The triple halving, as it's now being called, is going to do like a 90% reduction in the annual inflation rate of Ethereum, going from 4.5% down to 0.5%. That's a big deal. Again, we're totally talking about changing the economics. This is a massive shift in terms of inflationary forces. And when you add in things like EIP 1559, which is going to burn fees, it makes it even more likely that Ethereum then becomes a deflationary asset where every year there's actually less and less Ethereum available on the market because we're going to have very low inflation along with fee burning happening. You add that low inflation rate into the proof of stake dynamics that are happening with people locking up all that Ethereum. There's not going to be a lot of new Ethereum created necessarily to be dumped on the market. So we're going to see, again, this just big shift happening where all this Ethereum is going to be locked up, chasing the staking rewards, which would be 0.5% a year in terms of inflation, plus all, of course, of the gas fees that are paid, which, because of the rising demand for DeFi, all those gas fees paid go to the people staking in the network. Again, it's so exciting when you start to realize all these pieces coming together for Ethereum and the economic impact that all of those pieces, when you connect them together, are going to have long-term for the price of this asset. The sixth factor is that increasingly we are seeing the big money crowd choosing Ethereum as an investment. In fact, in some cases, they are choosing Ethereum over Bitcoin or selling their Bitcoin, moving into Ethereum. There's a lot of reasons why we are seeing institutional interest rising in Ethereum. Obviously, all the innovational stuff that's going on with Ethereum in terms of DeFi and NFTs, et cetera, et cetera. Obviously, all of the actual tech upgrades to the blockchain itself, transitioning to proof of stake, dealing away with the environmental concerns by dramatically reducing the power necessities for Ethereum, bringing in staking rewards. That's a really big deal. And think about all the institutional money parked in like Apple right now, right? 10x the market cap of Ethereum, pays out less than 1% a year in dividends, whereas Ethereum right now is paying 6.8, 6.7%, something like that. Annual staking rewards. Obviously, you have to lock your Ethereum up in the 2.0 staking contract as a one-way trip, et cetera, et cetera. If you want to know more about Ethereum staking, I did make a video on Ethereum staking, so just look up Lark Davis, Ethereum staking, and you should find that video pretty easily. But that big money interest, it's very real. It's growing. They understand the value propositions of Ethereum. There's entire teams of people researching these cryptocurrencies at these institutional investment firms. They're starting to wake up to the reality of what Ethereum is, why Ethereum is so important. And I think that's going to continue for a long time as Ethereum continues to define itself as being really a premier blockchain in the cryptocurrency space. And the seventh reason is that Ethereum is becoming the premier internet bond, or maybe we should just say it's becoming the premier internet index. Because holding on to Ethereum, it gives you exposure to everything happening on Ethereum. If you are bullish on decentralized finance, you don't need to own all the decentralized finance tokens. I mean, you can, and those can be very profitable. But you can just buy and hold Ethereum because it gives you exposure to that entire thing. Gaming. If you're bullish on gaming, just hold Ethereum. You don't need to hold the gaming tokens. If you're bullish on NFTs or decentralized identities or on stablecoin transfers or whatever else it might be, just buy and hold Ethereum because all that stuff happening is good for Ethereum. And the more that stuff happens, the better it is for Ethereum. Plus, of course, the staking rewards, which, you know, that's a pretty good APY for staking rewards for Ethereum. And of course, the cool part about staking Ethereum is that those rewards make more themselves. So when you hold a stock like Apple, again, let's use that as an example. You hold the Apple stocks, they don't pay out in more Apple stocks. It'd be cool if they did, but they don't. They pay out in dollars. Whereas Ethereum, it pays out in more of itself. So it pays you in more of an asset, which can be used as a wealth generating asset to create more of those assets. This is why the big money crowd is starting to take an interest in Ethereum. They want exposure to all this stuff. They want the sweet rewards. And they understand that just buying and holding Ethereum, it's the index fund of crypto right now. It is the internet bond. Holding that gives you exposure in a very deep and meaningful way to the entire cryptocurrency space. Anyway, it's for these reasons and more that I believe that Ethereum is going to go to $10,000. The price is going to continue to trend up over time. The 2020s are going to be a super exciting time for Ethereum, which is why I'm continuing to cost average into Ethereum, to add to Ethereum on the dips, to put Ethereum to work in lending platforms and in yield farming platforms to get more Ethereum for that long-term hodl. Your question for today: do you think that Ethereum is going to reach $10,000 or more one day? Let me know down below in the comment section. Thank you so much for watching today's video, and peace out till next time.